Absolutely, Tyler. Shanghai residents have been complaining tonight that police at transport hubs have been checking their phones, asking to see if they have VPNs or foreign apps like Instagram, Twitter, or Telegram. The encryption service, a Telegram, is often used by protesters as well as activists to communicate. Now, this is all coming after weekend protests had erupted in multiple cities, including here in Beijing, triggered by a deadly building fire in the far western city of Urumqi, which many people suspect could have been worsened because of COVID controls. Now, much of the public anger is being directed at the zero COVID policy. However, there are some indications that there's a wider dissatisfaction with the freedoms here. In fact, in Beijing, there were several people who are holding up blank sheets of white paper to protest censorship. In Shanghai, there are even some people who are calling for the resignation of President Xi Jinping. Now, Beijing has continuously signaled at this point that it's going to stick with the zero COVID policy and mitigate some of the more excessive curbs. But the big question is whether or not this slightly relaxed policy would be able to contain the virus. Ty?
All right, thank you very much, Eunice Yoon.
Working late into the night for us. Pippa, we're going to turn to you now. She's got a look at China's importance to the commodity market. Pippa.
Hey, Morgan. Well, fears around a slowdown in Chinese demand sent oil tumbling earlier today. WTI briefly went negative for the year, touching its lowest level since last December, with Brent sinking to its lowest since January. Now, China is key to the global oil market since it's the world's largest importer. This year, it's on track to import about 9.3 million barrels per day of seaborne crude, according to data from Kepler. That is down from more than 10 million barrels per day in recent years. Now, on China's demand side, JP Morgan said it's pacing to contract for the first time on record. The IEA forecasts total demand at just under 15 million barrels per day this year. That's still about 15% of worldwide demand, but it is down from last year's levels. Now, oil did reverse those big losses right around noon, with traders pointing to a possible output cut from OPEC. Tyler?
Thank you very much, Pippa. Let's get to Steve Kovac now and the potential impact on Apple and, of course, those newest iPhones. Steve.
Yeah, Tyler. So, look, the factory of Foxconn in China, that lockdown and protest last week could mean even fewer iPhones on shelves this holiday than even Apple warned about earlier this month. So what's moving shares down about 2% or over 2% today is Bloomberg reporting, citing a single source, by the way, that Apple will ship 6 million fewer iPhones this quarter than originally expected due to those protests we saw interrupt production last week. That's double the 3 million shortfall expected just a few weeks ago when Apple initially warned about it. Meanwhile, JP Morgan analysts this morning tracking shipping times for the iPhone 14 Pro. They say it will take 33 days to deliver it here in the U.S., which is a bit better than the 40-day wait from a week ago, but it likely doesn't reflect the impact we've seen from these protests. It's going to take another couple weeks for that to make its way into the supply chain. Now, Apple declined to comment on these latest reports. The last we heard from Apple was on Thanksgiving Eve that evening. Apple had people on the ground monitoring the situation at Foxconn. We have no updates from Apple or Foxconn since. So what this means, most people are not going to be able to get an iPhone 14 Pro in time for Christmas. Apple could also miss targets for iPhone sales growth this quarter, and a lot of demand could pull forward into January. Not to mention, this exposes the risk of Apple relying on China, including the human cost of making products there, guys.
Yeah, Steve, that's kind of where I want to home in this human cost. It's obviously it's awful from a human standpoint, but in the case of Apple specifically, such a major company on the world stage and certainly one that is very focused on things like ESG here at home, I've got to think that this is, from a PR standpoint, a very difficult situation for this company to navigate. And I wonder what it means for the company from that standpoint, and also in terms of its ability to now move more and more of that production to other places.
Yeah, Morgan, there's a lot of aspects to this, a lot going on here. So, look, this is probably the worst look for the Apple labor throughout the supply chain in China since about 2011 when those reports came out. We heard these awful tales of Foxconn workers committing suicides and stuff, you might remember. Since then, Apple has put out a lot of safeguards in place. They audit their supply chain. They make sure everyone, no underage laborers or anything like that being put out through their supply chain. And they've been, credited for doing a good job with that. But then when something like this out of their control happens, when the Chinese government decides to send in security forces into a Foxconn plant to keep workers basically locked in, yeah, it becomes a bad look for Apple as well, which has made this commitment to make sure these kind of human rights abuses do not happen within their supply chain. So I'm curious to hear from Apple what they're doing and what they've learned over the last week or so there on the ground about how they're going to mitigate these effects. But to your point, Morgan, they are trying to expand their supply chain and become less reliant on China. We've heard these reports that India is ramping up in a more significant way to make iPhones. But look, China is really the only place where most of the iPhones are made and where they have the labor force in order to do it. For example, when that first lockdown happened at that Foxconn facility, Morgan, they had to hire 100,000 more workers and turn on a dime and get those people in. They can't do that in many other countries.
Eunice, let me ask you, what are you seeing or hearing about how the authorities are addressing the protests? Cracking down would be the verb to use, I suppose.
Yeah, well, in Beijing as well as in Shanghai, we're hearing more about a heavier police presence, especially around the areas where there were protests. So these are police who are uniformed as well as those who are plainclothes. And so anybody who goes to those locations is usually asked several questions. As I mentioned before, there have been several people in those areas that are being asked specifically to show their phones and to see whether or not they have these different foreign apps. That's a development that we hadn't seen in the past, and a lot of that is because Chinese use these VPNs to try to jump the firewall here, and also to communicate using apps such as Telegram. So this is kind of a more technological way in which the security here is trying to get a little bit ahead of the protesters and any potential protests that could happen in the coming days.
Do we know, Eunice, what the size of the protest crowds are? Measured in the hundreds, measured in the thousands, or what?
It's difficult to say, but just based on the number of videos that have been emerging from all the various cities across the country, it's probably in the thousands or so. Definitely in the hundreds. We've seen hundreds just in, one city versus another. And but it's very difficult to say. And also because there are so many videos, and some of them, because of that, it's difficult to verify all of these various videos. But definitely there is some various locations that are very frustrated with these COVID controls.
And to your point, the fact that in China, which is so much of a surveillance state, the fact that people would be doing this, it really sort of speaks to them essentially risking their lives. Pippa, I want to get your thoughts on the commodity impact here in what is shaping up to be a very busy week or 2 weeks, because obviously we have the weakness, or we did have that weakness earlier today in crude prices because of the China headlines. But then you've got OPEC. You've got sanctions, more sanctions kicking in Europe as well. I could go on down the list over the next week and a half. Expectations about what all of this is going to mean for these conversations about the supply-demand equation.
I think the most common expectation here is that we just really don't know at this point because, as you mentioned, there are so many moving parts. And the Chinese demand story has been one that's been impacting oil for the past several weeks. Both WTI and Brent are coming off a third straight week of losses. But looking forward, we have that price cap coming up, potential price cap. We have the EU embargo on Russian oil, as well as the OPEC meeting on Sunday. And there are these reports that OPEC might be prompted to implement another production cut based on how much oil has fallen in recent weeks and months. But then looking forward, I think once these sanctions are implemented and once countries do start moving away from Russia, it's really hard to reverse those. And so kind of what people are now talking about is a new reordering of the global energy system, including even just Russia cutting off nat gas to Europe. They had been such a key supplier for so many years. And so right now there are all these moving parts that are getting sorted out potentially that could reshape things. But it's certainly a pivotal couple of weeks here for the commodities market.
All right, Pippa, thank you very much. And team, thank you as well. Eunice, Steve, we appreciate it. So what do you do if you're a U.S. company with operations in China or investors who have a lot of exposure to China? Let's ask Dennis Unkovic, partner at Meyer Unkovic & Scott, and a longtime visitor to China as well as a deal maker over there. Dennis, welcome. Good to have you with us. I guess,
Tyler and Morgan, thanks for having me on again.
I guess what leaps out to me is it's not easy being supreme leader, especially when supreme leaders' policies aren't working very well.
This is probably the worst day for Xi Jinping since he became head of China in 2012, and it looks like it's going to get worse.
And you would describe this, what, as second only to Tiananmen Square in terms of the threat and the visibility of the protests that we're seeing?
There have been no threats to the Chinese leadership since Tiananmen Square in 1989. And this is the first time, I think, in multiple cities in China you've seen, and I don't know how many people are on there, your reporter just was talking about that, but there's major dissatisfaction of the Chinese people with the government. And we haven't really seen that in more than 30 years. So
let's talk to boards of U.S. companies that may have operations or be dependent on supply from China. It's late, you know, it seems like the cup of coffee is mostly drunk over there. It's late to be making changes, but companies can't be as dependent on China as they have been. Isn't that obvious?
Tyler, CEOs and board of directors needed a wake-up call. This is it. Now, a lot of them have been saying, well, things are going to be getting better. The elephant in the room here is the relationship between China and the U.S. on a political basis. And if that continues to get worse, the opportunity for reliable sources of supply and commodities and products, you talked about iPhones a few minutes ago, is really going to drop. That's why I think you're going to see boards, hopefully, if not for the first time, in their next board meeting, sit down with the CEOs and say, where are we? How committed are we to China? Should we diversify? And if they're sole sourcing out of China, I think they're late to the party, but it's time to do it.
So how quickly can it be done? If you're an Apple, for example, we were just having this conversation where maybe you are starting to see some diversification in the supply chain, but not necessarily in a meaningful or major way in the near term. How quickly can you actually pivot and make those moves happen?
Morgan, when I was on your show a couple of months ago, we talked about Apple. It started to look at China. About 5% of Apple's phones are now produced in India. I think you're probably going to see that raised to 30 or 40%. But as you pointed out, nothing happens immediately. It takes time to get it done. That's why I think boards have to give this a really top priority, because in the past, companies said, well, I don't know about the financial problems. But now there's not just a financial problem, there's a reputational problem. How does Apple look going into Christmas or the holidays in a couple of months from now saying, we're not going to have enough phones for you? These are the kind of pressures that I think board of directors have to put on the CEOs and the C-suite level people to say, what are you doing?
The flip side of this is you have companies that manufacture in China who may be looking to diversify, but you have many companies, many international companies, many American companies that are looking to sell in China and into China as well. So how do companies walk that line and continue to drive sales and continue to appease their investors, but also potentially appease the leadership of a country that is going into even fuller crackdown right now?
I think Xi Jinping has told you what China's future is going to be. He's not going to double down. He's going to triple down now on the COVID-19 problem that your reporters were talking about a few minutes ago. So ultimately, I think companies are going to have to make a balancing judgment. Obviously, if the Chinese market is the only market you have, then you probably have to go along with this. But as the global market is changing, and you've seen what's happened to the supply chain really over the last 3 to 4 years, I think it's time that tough decisions are going to have to be made. And that's why the CEO and boards are there. And I think it's time to stop putting their head in the sand and say, how am I going to make these decisions?
Let's say I'm an American investor and I am tempted to put money to work in a mutual fund or an ETF that has significant China holdings. What would you tell that person?
I would tell them to be very careful. If you've seen what's happened to the Chinese market overall over the last year and a half, when these pressures have grown, there has been pressure downward on the value of those investments. So I'm not saying don't do business in China. I'm not saying it's bad, but I'm saying the risks are higher there than I think most of the analysts and the CEOs have put on it in the past.
Dennis, thank you very much. Appreciate it.
Thank you.
Dennis Unkovic, thanks.